In a stunning turnaround, Petrobras is soaring dividends higher despite oil prices plunging, proving that smart production strategies can conquer market chaos. But here's where it gets controversial. Is this short-term triumph masking long-term risks for an oil giant heavily reliant on volatile commodities? Imagine you're an investor in one of the world's biggest oil companies, and just when oil prices take a nosedive, the company not only holds steady but actually boosts your payouts. That's exactly what's happening with Petrobras, Brazil's state-owned energy powerhouse. The Brazilian oil behemoth has announced that its dividends for the third quarter will surpass those from the second quarter, all thanks to a remarkable uptick in production and profits. Let's break this down step by step to see how they're pulling it off, especially for those new to the oil industry, where terms like barrels per day might sound confusing at first. First off, Petrobras reported a robust net income of $6 billion for the third quarter. This figure represents a modest 2.7% increase compared to the same period last year, but more impressively, it's a whopping 27.3% jump from the previous quarter. And get this, they achieved this despite a significant drop in oil prices, which fell by more than $10 per barrel. How? By ramping up production and launching new fields that acted like a financial shield against the market's downward pressure. To clarify for beginners, oil production isn't just about drilling wells, it's about optimizing operations to maximize output even when prices fluctuate. Petrobras has been doing just that, with their efforts in fields like Búzios pushing boundaries. In fact, the Búzios field alone reached a historic milestone, producing over 1 million barrels per day in October. That's like hitting a personal best in a high-stakes race, setting records that keep the company ahead of the curve. Overall, Petrobras's combined output of oil, natural gas liquids, NGL, and natural gas averaged an impressive 3.14 million barrels of oil equivalent per day during the quarter, a solid 8% rise from the one before. This growth didn't happen by accident. It stemmed largely from peaking production at design capacity in the FPSO Almirante Tamandaré unit within the Búzios field. Plus, they boosted capacity in the FPSO Marichal Duque de Caxias in the Mero field, showing how strategic investments in floating production, storage, and offloading vessels can pay off big time. For context, FPSOs are essentially massive, sea-based factories that process and store oil, making them crucial for deep-sea operations where traditional platforms aren't feasible. But here's the part most people miss. The real game-changer is how Petrobras's leadership views this as a blueprint for resilience. As Chief Financial Officer Fernando Melgarejo put it, Petrobras is delivering positive financial results and returns to its shareholders, despite the new oil price level. Over the last 12 months, Brent prices have fallen by $11 per barrel, and we have managed to offset this impact on revenue by increasing our oil production to over 2.5 million barrels per day, setting several operational records. In simple terms, Brent is a benchmark crude oil price, and by cranking up production, they've balanced the scales against cheaper oil, ensuring revenues stay strong. This strategy culminated in the company's board approving interim dividends totaling $2.27 billion, equivalent to about 12.16 billion Brazilian reals, for the third quarter, slightly exceeding what analysts had predicted and far outpacing the $1.6 billion paid out in the second quarter. Remember, that previous payout had disappointed investors, who were expecting more, so this boost is like a reassuring pat on the back for shareholders betting on stability. On top of that, Petrobras celebrated another record, oil exports averaging 814,000 barrels per day, fueled by their heightened output. Brazil, as a major non-OPEC plus player, is now a key force in the global oil supply scene, contributing to what's being called an oil glut in some circles. An oil glut just means there's more supply than immediate demand, which can drive prices down further, a topic we'll touch on in the controversy section. And this is the part most people miss. While the production surge is impressive, Is Petrobras risking over-reliance on new fields that might not sustain this pace? Or are they setting a bold example for other oil majors to follow in turbulent times? This isn't just about numbers, it's sparking debates among investors and environmentalists alike. Critics argue that pushing for higher production could accelerate environmental impacts, like in the delicate ecosystems of Brazil's offshore fields. On the flip side, supporters see it as a smart way to generate jobs and economic growth in a country where energy security is paramount. What do you think? Should Petrobras prioritize shareholder returns like this, even if it means intensifying extraction in a world increasingly focused on sustainability? Or is this a controversial win-win that proves oil and innovation can coexist? Share your thoughts in the comments below. We'd love to hear if you're cheering this as a masterstroke or waving a caution flag. By Tsvetlana Paraskova for oilprice.com. More top reads from oilprice.com. Ukrainian strike shuts key Lukoil refinery as sanctions weigh on Russia. https://oilprice.com/energy/crude-oil/Ukrainian-strike-shuts-key-Lukoil-refinery-as-sanctions-weigh-on-Russia.html. Europe to end fuel imports as domestic production exceeds demand. https://oilprice.com/energy/energy-general/Europe-to-end-fuel-imports-as-domestic production exceeds demand.html. Cheap power is the secret to winning the global AI race. https://oilprice.com/energy/energy-general/cheap-power-is-the-secret-to-winning-the-global-AI-race.html.